Every day, I talk to 30, 40, 50 people about hard money lending. Most of the time, they're calling me for a loan on the prospective investment property. But a lot of people, more and more, have been calling me about buying a single family home that they're planning to move into or buying a vacation property. And I over and over and over, I go over what is a hard money loan? Who are these loans right for? And so I figured I'd make a video to kind of reiterate some of my answers and kind of go over this topic because I think whether you are a real estate investor right now or you are a aspiring investor or maybe you're just a homeowner, there's a lot of misconceptions about hard money lending. And so let's see if we can get rid of these. So, who should use hard money or bridge financing? Well, first of all, what's the difference? Not much. Bridge loans are typically commercial speak for hard money lending. Hard money is a commercial loan in the residential space on residential properties. They are exclusively both products are exclusively for investment properties. That means if you're a homeowner and you don't qualify for a conventional mortgage or the property doesn't qualify for a conventional mortgage, but you want to buy it and move into it, we can't help you, unfortunately. If you are an investor and you're looking to buy a property, we might be able to help. Hard money loans and bridge loans are typically designed for short term projects. That means we're not looking at a 30-year fixed mortgage. We're not even looking for a 20-year amortized mortgage with balloons here and there. We're talking about terms of anywhere from 6 months to 5 years. The typical hard money loan, my typical hard money loan has a 12-month term with no prepayment penalty after the first 90 days. Most of my clients are in and out of the loan in somewhere between 6 and 12 months, right? The third thing to understand about hard money is that it is expensive. If you're used to you know, the costs of a traditional loan, you might be a little bit shocked at the additional expenses. That does not mean that it doesn't have its place. It's a tool, just like a hammer. You can use a ball peen hammer or you can use a sledgehammer. And if you use the wrong one, you're probably going to end up with a lot of damage, right? Hard money and bridge financing are ideal for certain projects, others not so much. So, what kind of ideal projects are we looking for? First and foremost, value add. I'll go into each of these in just a minute. But first, value add. Second, where there's a timing aspect or speed is part of the project. And the third is when you have unconventional situations, right? So let's start with the first value add. You've got value add construction, which is probably the most used form. The number one reason that people use a hard money lender is to do a fix and flip project. You find a beat up house or a rundown property, you want to go in, buy it, renovate it, and resell it. Sometimes you can put in $50,000 in value add construction and end up with $100,000 in value. That's a perfect project for us. Other times you're buying an investment property that's going to be more long term, but the place needs some upkeep. Let's say it's a 4 unit apartment building and the units are, maybe it's 50% occupied. It needs a new roof. If you update the windows and you put in, new kitchens and bathrooms and update the units, you can double your rent. Great use of hard money, right? The second value add is when you have a change of use or a change of cash flow. Especially in this market, there's a ton of properties that have long-term tenants with undervalued rents, right? They've been paying 650 to 850 a month for the last 10 years and now the rental rate should be closer to 1300 or $1500 a month. It's a great idea on a 4 or 5 unit building where cash flow is, a determining factor in the value of that property to buy with hard money, turn over the tenants and refinance into longer term debt, or where you have a situation where you can buy, let's say, an apartment building and transition those units into condos, right? That's a change of use. And oftentimes, hard money can be used to facilitate that kind of situation. maybe even when you're changing the zoning on of a property, you buy a large single family that you can obviously do some renovations to, but you can convert it to a multi-unit property and then refinance or sell. And each of these situations is going to be very dependent on the property and the area where you're investing. And so, there are times when, again, this makes a lot of sense, and then sometimes when it doesn't. The second factor here we mentioned was speed, right? Fast closing. We are a private lender and we're self-funded, and our underwriting is light and fast. And typically we can underwrite and get you approved on the same day you contact us. And if you need to close tomorrow, that means that we can underwrite today and fund your deal tomorrow. Obviously, there's some caveats to that. You're going to have title work. You're going to have all your ducks in a row, but you're not going to get that with a conventional lender. During the COVID shutdowns, we did a ton of commercial refinances where you had people where they might have a commercial building and access to capital was not flowing readily. And we were able to underwrite and fund loans on so that people could have access to the equity that they have in their properties and take advantage of other opportunities that were in the market. That's another good use, and timing is a big part of that. If you have a commercial property and let's say you need to access that capital to close on another building that you're buying, but a commercial refinance is going to take you 3 or 4 months to get through, we might be able to close that same loan in 15 or 30 days, which gives you the ability to move quickly on that other asset. And then the other, element of speed here is oftentimes if you're negotiating with a seller, I mean, I've seen this myself. The difference between closing this Friday and closing 4 or 5 weeks from now, it can give you a major advantage. Oftentimes, sellers have motivation that, yes, it might be financial, but a lot of times it's situational too. If they get that money Friday, it's going to solve a problem for them that's going to, kind of explode and be a much bigger problem in 4 or 5 weeks. So, hard money can provide that speed to be able to get you to closing much faster and act as a cash buyer in even in a competitive situation where you've got multiple buyers bidding on the same property. The last portion of loans that we do a lot of are these unconventional situations. You could be talking about a non-conforming single family home, right? The property has a hole in the roof and no bank is going to finance that, right? Or there's not a working heater in the property. Again, it is going to preclude that property from qualifying for conventional mortgage. Hard money, we're looking at not just the as is value, but also what the value of that property is after the renovations are complete. And so we're able to fund a portion of the purchase and fund the renovation so that you can buy that property and maximize your returns here. Another category that falls under that unconventional, um, I don't know, that unconventional category is going to be vacant or commercial properties. This is a big one. Vacant commercial properties for a commercial lender, they're going to have very little value. You think about the malls right now. They might be worth $100 million or they might be worth nothing depending on who is buying that property and the value based on the user for that property. It's very important, when you're looking at, let's say you're buying a building for your business, that building can help you make more money, or it can be a detriment to somebody else where it really has no value. And so a hard money or a bridge lender can step in there, help you purchase the property, and then get it occupied with tenants. And now all of a sudden that building has cash flow and it has real value to it. And then the third is just generally unconventional situations. We just funded a loan last month for a woman who she had 3 properties in Lancaster that were in a bridge loan situation. And the lender, they came to the end of the term on this loan and it was coming due. And they got to the point where they wanted to be paid off in full. And what she was trying to do is take out a DSCR loan for each of these properties. The issue that she had is that they would not provide a payoff for one property. So she had to do a simultaneous close for all three properties at one time, which was creating a major issue for her throughout this process. And so what we were able to do is refinance her in a short term period when other lenders weren't able to meet that need, right? We were able to refinance her into a hard money loan on three residential properties with a preset payoff for each of the properties. We did one loan, but we gave her preset payoffs so that when she was ready for these DSCR loans, she could refinance them one at a time and could very easily transition into that longer term financing. The point here is that hard money is a tool. If used properly, it's going to help you make more money. It's going to allow you to move more quickly and allow you to fund deals that you normally may not have been able to be involved in. If used improperly, it's probably not going to work for you and it's going to cost you a lot of money. So make sure that you're using the right type of financing for your project, and make sure you pull the trigger when you need to. Finding enough money to fund your real estate investment projects can seem like a daunting task. Well, hard money oftentimes fills that gap and can be a great option, but you're probably wondering, how the heck do I get approved? That's why we put together the 7 steps to a guaranteed hard money loan approval. You can download the free report at hardmoneybankers.net/build grow. That's hardmoneybankers.net/build grow.